Are you employing more people, less people? I noticed that 2 or 3 years ago you had a drop-off in your total employment.
No, our business has been very robust this year. We've grown twice as fast as the market. We're actually in the midst of hiring right now. We have 4 plants in North America, 2 in Europe, and we are actually in the midst of job fairs and all sorts of things to attract workers, particularly right now in Pennsylvania. So we're in a hiring mode. For us, the business has really been driven by the low unemployment rate, which is, as your earlier guest talked about, there's a real war for talent, and that's creating real demand for our products because people want to work in an environment that reflects kind of how people are working today. Height adjustability, more collaborative, more group and hospitality based. So we're seeing increased demand. The last 2 years have been very strong for Knoll.
Are your costs up either in the materials you use, as Michael just referred to, or your employees?
Well, the good thing for us is we're mostly domestic manufacturers. So we do have some impact from the tariffs. We do source components globally and everything. But
some of the raw materials.
Some of the raw materials. But we've been able to mitigate a lot of that inflation moving to non-Chinese, countries and things like that, which have helped all that. So we haven't seen a huge impact there, and actually steel and some of the other commodities, aluminum that we use the most, really have rolled over, and year over year now they're down.
So you're basically saying that the hot labor market is more important for you than the tariffs and the uncertainty with the input cost? Or how do you think about the transmission mechanism from the trade war? What sort of are the different channels through which that this will impact you?
I think the trade war, the biggest impact for us really is the uncertainty it creates. Where our business is very much influenced by business confidence, and clearly CEO confidence has been shaken by the uncertainty, whether it's Brexit or tariffs or tweets or you name it. And so that does create, I think, kind of a little bit of a pall over demand. But on the flip side, the low unemployment rate is creating a real war for talent. And so CEOs are being forced to invest in kind of state-of-the-art workplaces in whatever segment of the economy you are, not just high tech, but if you're consumer retail, if you're manufacturing. And so that really that's had much more of a positive kind of secular force than the headwinds of tariffs for us.
So you're basically saying as long as people come in the door and demand your product, then there might be some problems in the back room, but that uncertainty is not going to change as long as demand is as strong as it is.
I think as long as unemployment is low as it is, people are going to be competing for talent. Millennials coming to the workplace, they don't want to work in their father's cubicle. They want an environment that's much more collaborative, more open, much more resumercial, we call it, and that creates demand for our products.
But does that also mean that you have been making benefits that are more generous, as we heard earlier, or have your benefits being less generous or the same?
Actually, we've not had tremendous wage inflation pressure. I mean, I think between 2% and 3% when you count, benefits and salaries and things like that. And we've been able to attract workers at those levels. So that has not been a big headwind for us.
Torsten said as long as people come in the door, I think was the expression you used. But Knoll is high-end. Let's be honest about this. It's high-end. Are you seeing companies pull back on their orders, either not order as much or even if they've made orders, pull back on them because of some of the uncertainty you just referred to?
Well, we've worked really hard over the last 3 or 4 years to diversify our business. So we're no longer actually just high-end. We acquired a company called Mudo, which really plays in the affordable luxury market and really targets the resumercial, ancillary, collaborative areas of the office. And actually just last week, we announced the acquisition of a company called Foley, which really focuses on small and mid-sized businesses. So we've really been diversifying our offering. So in terms of what we're seeing companies doing today, our funnel of activity continues to grow. Our business remains strong. So we haven't seen that, but we tend to lag. And so I think if CEO confidence stays down, that will have an impact on 20 and 21 potentially. But again, the low unemployment rate is somewhat of a countervailing trend that may offset some of that weakness.
We talk a lot about sort of what would make a CEO stop hiring and then fire. What would make you do one of those two things? And how quickly do you make those decisions?
I think, listen, we tend to make them pretty quickly. I mean, our visibility is, generally in 90 days. We have a good funnel of what's going on in the next 90 days, and we continue to see growth and activity there. If we were to see that funnel start to turn down. If we were to
then you stop hiring but not fire?
I think then you would kind of lock down a little bit, and you would kind of watch and wait a little bit. If we were looking at, we look at real estate, we look at absorption rates, our company's leasing space. We look at hiring levels, our company hiring workers, or is there a fair amount of turnover and those things all remain positive right now.
And at the macro level, we see these two very important trends we spoke about earlier, namely a smaller work week and a decline in overtime hours. At the micro level, and what you're seeing in your data, have you seen less overtime hours and shorter work week, or are you basically unchanged on
we
those?
haven't seen any of that. In the fourth quarter, the back half of the year tends to be a little stronger for us than the front half. So we're still kind of, working full bore and everything. We haven't seen any reduced work weeks in our plants or anything like that. And more importantly, in our clients, which tend to be more service sector focused, there we haven't seen any turn down. We were talking about tech workers, education workers, healthcare. I mean, we're in those segments of the economy that are growing right now. So consumer, those areas and our clients in those areas aren't backing off at all. So we're not really affected by manufacturing hiring in terms of end demand for our products.
So just to be clear, have you seen any erosion in your book of business at all going out? And how far out can you see?
Yeah, we have a good visibility in terms of like a 90-day window.
Just 90 days?
Well, we have a rolling funnel that looks at kind of the course of a year, but we're really good in the 90-day window. In there, I'd say, listen, we were growing, double digits at the start of the year, and as we guided in our last call, we think it kind of stabilizes in a mid to upper single-digit rate, and that's pretty consistent with what we're seeing in the industry right now.